Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 U.S. market update. Well, the economic news of the day was the jobless claims number came in and it was horrific at 3.28 million, but there were some estimates as high as 4.4, so it actually was viewed as being slightly better than expected. The stimulus bill has passed the Senate. It goes to the floor of the House tomorrow where it's expected to pass there as well, so the rally continues. But for how long? Let's look at the charts. So when we look at the chart, you can clearly see the bounce is underway, and there's the wave 4 projection of where the bounce could go, and that is a projection. It's an Elliott wave projection on when the wave 4 begins, how far could it go, and we're kind of sneaking up on the lower end of the range, so there's something to pay attention to. There's a phenomenon going on in the market that I wanted to talk to you about, but before we get there, there's something else that I wanted to show you that I mentioned in a previous recording, and that's that we had closed out call options for our subscribers, our alert subscribers yesterday. We were able to get near the top of the day, and the market sold off towards the end. And I mentioned that the market may go higher from here, but because there was heightened volatility yesterday, you had to take that into account in the decision on when to close the calls out. Because if you had target prices higher, which we did with the bouncing, why would you close them out before you hit that target? Volatility has to matter. Well, you can see that we did close much higher today, and it'd be easy to look back and say, oh, gee, you should have waited. But look at the difference here. Look at the pricing of these calls. Here's where the calls closed today. Now, if you watch the recording, you know that I mentioned, and it was posted on our website live, that we got 85 cents for these 305 strike calls. They closed today at a bid of 66, ask 71, even though the market closed significantly higher than where we closed the calls out yesterday. Volatility matters, pricing matters, the math of options matters. All that stuff is important in the world of trading options. Let's look at volume, and here's what I wanted to talk to you about, the phenomenon that's undergoing right now, and that's end of quarter rebalancing. It normally starts 3 to 5 days towards the end of a quarter. It happens every quarter, and it's normally not a big deal. Kind of just comes and goes. It moves the market maybe a little bit, but it's normally not something that people really pay attention to or even notice is occurring. Just to give you an example of how this phenomenon works is that at the end of the day today, there was 300 billion to buy at the close. So buy at the close of $300 billion worth. All of a sudden it matters. So the way it works is if you're a mutual fund or an investment account of some kind, and in your prospectus you say you're going to be 60% equities, 40% bonds, and then you have a huge drop, and now the percentages change to where you have less equities and more bonds. To rebalance, to get back into what's in the prospectus, you would have to sell bonds and buy equities. And because we've had such a massive drop moving towards the end of quarter, mutual funds and investment management accounts are having to rebalance to meet those predetermined percentages that are in the prospectus. So that's undergoing. It's part of it, not the only thing, but it's part of it that I wanted you to be aware of. The end of the month is Tuesday next week. I think that'll be done before then. So it's not like, okay, the rally continues till Tuesday. I'm not trying to say that. But something to pay attention to over the next couple of days. So let's look at some other levels. Look where we closed today. This is the zigzag that I've been showing you. You've seen this numerous times, and we bounced right back to the 100% extension. Well, the reason that level matters is based on Elliott wave rules. If you're going to go down to the next level, so we're going to have a further extended level. If we do that, we're supposed to go back and test the previous fib level. So the previous major fib level would be that 100% extension, which was the primary target in a zigzag. When you've had a 50% B-wave correction, you extend 100%. So we came down, we hit the extended level of 161, well within Elliott wave rules to go back, test that level before coming down to this new level. Now I know there's a lot of chatter out there of the fact that this is it, we're done. We're not going any lower from here, but I've mentioned to you that I still think that we've got to go lower from here. I have also said, I mean, if you look at the cases of the coronavirus in the U.S., they're accelerating at an alarming rate. So we certainly haven't peaked out there. But I've also said that I feel like the market will bottom before the cases peak out. Just doesn't feel like that's it. Like we're done and we're rocketing back to the upside from here. And I do think this gap matters. We've had some discussions there as well. So that's one target to look at. The next one to look at would be just a fib retracement on the zigzag pattern. So if the zigzag's done, just a fib retracement, a normal fib retracement, the first level would be the 38.2% level, which is 270. That's that level that Jeffrey Gundlach came out and said that he saw the S&P could go as high as that level on this bounce. And then if we break that level, we could come up to there, or even all the way up to the 61.8% fib level. And this could be a complex C wave, because remember we said we had a mono A and a mono B. So having a mono A, B, and C is unusual. So we could have a complex C where we could bounce that high and then come back down to a lower low and still be well within Elliott wave Fibonacci rules. So that's a potential target. And then last but not least is just a fib level bounce on the C wave itself. So if we just pull this level here on the C wave, you can see these levels are right around where that wave 4 projection is. And you always want to pay attention when you have more than one Elliott wave Fibonacci level giving you roughly the same price. So that tells you we're in the neighborhood here. A 50% corrective level will be 265, the 61.8, 277, which is pretty much framing where this wave 4 said we were going to go, which means that we don't have too much more to the upside to go. That could kind of coincide with the end of the rebalancing as well over the next few days. So a lot of things to consider. The targets aren't that far apart. We've had a nice bounce. Is that the end of it? We'll see, and I'll be back to report it to you. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.